If you're currently working and thinking about collecting Social Security benefits, it's crucial to understand the updated rules for 2025, or you could risk having your benefits temporarily reduced. In this video, I'll walk you through the new income limits for 2025, what the Social Security Administration, SSA, counts as income, what happens if you exceed those limits, how your spouse's income affects your benefits, what happens to withheld benefits, and finally, updates on Medicare, including a way to potentially save over $100 annually. Hi, I'm Wami, an entrepreneur and personal finance educator with over 15 years of experience helping seniors get the most from Social Security, Medicare, and other benefit programs. I also teach finance at a top U.S. university. If you're new here, please hit like and subscribe. It helps us keep creating helpful content like this. And let me know in the comments, what city and state are you watching from? Working while collecting Social Security in 2025. For 2025, if you're under full retirement age, FRA, and receiving Social Security, the earnings limit is $23,400. If you earn above this amount, $1 will be withheld for every $2 you earn over the limit. Full retirement age, FRA, for people born in 1960 or later is now officially 67. In the year you reach FRA, the earnings limit increases to $62,160. For any income above that, SSA will withhold $1 for every $3 earned. Once you reach FRA, there's no income limit. You can earn as much as you want without benefit reductions. What counts as income? When determining if you've exceeded the income limit, the SSA only counts wages, self-employment income, bonuses and commissions, not counted, pensions, investment income, interest, annuities, other government benefits. Also, your spouse's income doesn't count toward your limit. The earnings test is applied individually, not based on household income. What happens if you go over the limit? If SSA estimates you'll exceed the earnings limit, they will withhold your Social Security benefits early in the year. For example, if you're $5,000 over the limit and receive $1,000 a month in benefits, SSA will suspend 5 months of payments. Important, always report expected earnings to avoid overpayments. Due to updated rules, SSA may withhold 100% of your check, not just 10%, if you owe money back due to overpayment. First-year exception rule. If you retire mid-year, SSA applies a monthly earnings test. In 2025, if your monthly earnings stay under $1,150, you'll receive full benefits for those months, even if your total annual income exceeds the limit. After the year ends, the IRS shares your income data with SSA and adjustments are made. If too much was withheld, you'll receive the difference. If not enough was withheld, you'll need to repay the excess. What about spousal and survivor benefits? If you're collecting spousal or survivor benefits before your FRA and are still working, the same income rules apply. However, your spouse's income won't affect your benefits. Only your own earnings do. Disability benefits, SSDI, are different if you're on Social Security Disability Insurance, SSDI. In 2025, you can earn up to $1,620 a month. If you're blind, the limit is $2,700 a month. Going above these limits may disqualify you, as it suggests you're capable of substantial gainful activity. What happens to withheld money? This part often causes confusion. If your benefits are withheld due to excess earnings, that money is not lost. Once you reach full retirement age, SSA recalculates your benefit. You'll be credited for the months your benefits were withheld, as if you had delayed taking benefits. This increases your future monthly payments. Working may boost your benefits. SSA calculates your benefits based on your highest 35 years of earnings. If your current income is higher than past low-earning years, those years can be replaced, resulting in higher benefits. Each year, SSA reviews your earnings and will retroactively adjust your payments if needed. Tax implications. If you're working and receiving Social Security, up to 85% of your benefits may be taxable, depending on your total income. Work with a tax professional to estimate your expected taxes. Whether taking benefits early makes financial sense. What about Medicare? If you're 65 or older and still working, you might not need to sign up for Medicare right away if You have credible employer health insurance. Your employer has 20 or more employees, but once you retire or lose coverage, you must sign up to avoid penalties. New in 2025, some Medicare beneficiaries may be eligible for extra savings, with potential average savings of $1,100 per year through Medicare savings programs and the Part D low-income subsidy. Make sure to check if you qualify. Final thoughts. Working while collecting Social Security is possible, but the rules are specific and not understanding them can cost you money. Always track your income carefully. Report expected earnings to Consider your long-term strategy with a financial advisor. Don't forget to like and subscribe, and let me know where you're watching from in the comments below.